Welcome to Profile Traders, and you're listening to Reza and my market analysis for February the 9th. In my previous statement, or I should say I tweeted it out, that last night market was in a bracket between 56 and 43, and then I stated that below 43 we should be targeting the POC below at 25, and above 56 we should be targeting 70. Now it happened that market came to 43, and 43 having been the bottom of the bracket, once it tried to break it, there was no follow through upon the break. Then somebody mentioned that we did break 43 and nothing happened, therefore the analysis should be taken with a grain of salt. Of course it can, but also understand that every time that you break a level, there are many factors that you have to take into account in order to assess if a break has the footprint of success or if a break has the footprint of failure. And any break that slows down upon the break, or any break that goes rotational and doesn't bring in enthusiasm upon the break, are breaks that have to be seen as suspicious. Then once you have assessed that, you have to have a strategy to enter the trade plan. So it is not that just because you have a 43 level that it goes to 41, you short the house. If it goes back up above 43, you took a loss. That's all nonsense gambling. So when I state levels and things like that, it's to give a big benchmark as of what to watch. Now it doesn't mean that if I have a 43 and it goes to 42.5, that's it, the level is broken. That's not how it works. So I would like to clarify this so there is no misunderstanding. As of right now, if we look at what happened, is that we opened with a gap down last night. We closed at 56 and we opened at 50. And all day today we were unable to go even fill the gap. And we remained rotational, almost copycatting the range of the overnight without neither going up nor down. But the fact that we closed towards the bottom of the range again is another sign of possible weakness. Therefore, the bracket now is widen up. Instead of 43, it now becomes 38, and on the upside 56. So if 38 breaks, we want to see a continuation and expansion of price upon the break in order to assess it as a solid, valid break. Otherwise, again, the 38 could break to 37, 36, not give much more on the downside, and then stall, and that stall will be a problem again for the break. So it looks like market is on hold for something. I don't know if it's a news pending, it's something that they did not feel like commit at all, either side. All of it was just rotational hesitation. As far as crude now, it's a little bit funny when I read the news and hear what's going on. When crude was at $43, $44, they were sending all their sheikhs and their sultans and all the princes of the Saudi kingdom telling us how at $25 and $26 their economy and their financial health was so strong that they could even withstand that with no problem. No problem. Then few days passes and they start to feel the damn heat from oil at 43 and 40, and suddenly they figure out, oh, maybe it's not such a good idea to go and spread around such stupid, unrealistic rumors. So now all the sultans, all the sheikhs and the princes and the royals, everybody is out talking about how oil should now go to 200. And all of a sudden, between last week to 2 weeks, they have realized that even demand has massively surged. So, it's all nonsense. They cannot sustain these low prices, so they are doing everything that they can to now push price on the upside, and so far it's doing a little, it's having a little effect on the market, but the way it is going up, it's not at all impulsive. It seems like as it is going up, a lot of people are using this move to unload as well. So obviously now the upside resistance level will become at 54.25. Until we remain below that level, we should then come down in order to come towards, right now the first level of support I would give it at 51.25. In order to come towards that area, today's low needs to break with vigor again. So we can now bracket it between 54.27 as resistance area and 52.25 as support area. A break on the downside, I would target 51.25. A break to the upside, in this case, should take us for a possible touch of our main trend line somewhere above, right there at around 54-ish, 54 and a half-ish. So this main trend line touch will definitely be with a bang and a boom. Have it on your daily chart, a very important one. Now for gold, same thing, nobody was interested at all today. Very minuscule range, which now gives us a very clear-cut scenario. In order to break up, we have to clear 43.5 in order to go towards 1250, and for down we need to clear 1234 in order to go towards this 1228 low. Very close, tight bracket. So the breakout of these tight brackets usually have good follow through, so keep an eye on it. That's it for today. Again, this was Reza. If you like to join our group, check us out at www.profiletraders.com. Thank you for listening.